Hello, friends. Of late, I'm trying to train my son and groom him to basically start trading for a family office company. And the first basic question that he had to ask me was, Dad, how much money should a trader have before he can start a trading desk, a full fledged trading desk, trading across multiple asset classes and having exposure to one or more assets at any given point in time simultaneously? Now, that is a very interesting question. I'm sure many of you would be seeking answers to that. Now, I will present my point of view, of course, from a real world trader's point of view, somebody who's been trading these markets for 3.5 decades or more. And I've heard a lot of stuff and I've seen a lot of stuff on the internet saying you can start trading with as much as 20, 30, or even 50,000 rupees. And you could basically make do with this capital to earn decent amount of money. Now, do remember, trading, like any other commercial enterprise or commercial business, is all about yield, return on investment, ROI. Now, if you think your household expense in a tier 1 city with a family of 4 would be very easily going up to 100,000 or 1 lakh rupees a month, and if you have 50,000 rupees as base capital, you are looking at a 200% return on investment to be able to basically make both ends meet. Now, that is completely impractical. So now, what is the absolute number that we are looking at? I want to tackle this issue from 2 points of view. One, financial, and the other, psychological. Because I believe in behavioral finance and behavioral technical analysis with a 360-degree worldview of the markets. So let's take a serious look at it, because trading is a serious business. Now, how much money do you need to trade one derivative contract? Now, the fact that I'm talking about trading would mean trading. You could be a swing trader, you could be an intraday trader, you could be a micro trend trader who would square up the transaction in 59 minutes and 59 seconds and not keep it for 1 hour. Now, that obviously means that we are focusing on trades, not deliveries. Now, one lot of Nifty takes approximately 63,000 rupees. Bank Nifty takes 96,000 rupees. A PSU like BHEL would cost you 2 lakh 2,000 rupees in span margins. Ashok Leyland 2 lakh 10,000 rupees. Coal India 1 lakh 91,000 rupees. Now, that's just one lot. And I'm coming to more. Let's go to commodities. What happens when you trade one lot of aluminium? 1 lakh 30,000 rupees. Crude oil, 2 lakh 28,000 rupees. Gold, 6 lakhs 59,000. Natural gas, 42,000. Silver, 3 lakh 19,000. Now, this is not a standard figure. Why? Because as I've explained to you in a past video, margins in India are telescopic. They go up, they come down. Based on what? Based on exposure. Now, what is exposure calculated as? Market-wide position limits, or MWPL. Now, this is a figure that my online family members who've been associated with me long enough will instantly recognize. Why is MWPL so important? Not only does it tell me the financial and emotional commitment of traders as to how big or small it is, it also tells me what the margins will be like. Now, you see, we have a telescopic margin system in place wherein if exposure or MWPL crosses 60%, margins start to rise. So a BHEL might be 2 lakh 2,000 rupees today, but the day MWPL crosses 60%, your margins will start going up. Your net margin will be a component of span, exposure, ELM, that is extreme loss margin, and ad hoc margin, if any. Should the markets get volatile, the margins can balloon up suddenly. So you need to keep that much more money in place. You know why? Because being kicked out of a trade because you ran out of margin money is a criminal offense in the world of trading from my point of view. You can't be running out of money and getting out of trades. If your stop loss is hit, that's another matter altogether, but you can't run out. Now, what happens to the emotional aspect about of the trader because of money? If at all you lose money in a trade, and I'm sure you'll identify with me because this is what I feel in spite of the fact that I've been in this market for 37 years now. When I lose money in a trade, I feel down. I feel depressed. The dinner or lunch doesn't really taste all that good. I have a restless night when I try to get to sleep. I want to get back into the market next morning and recoup my losses. I'm impatient. I'm generally downcast. Now, this is your morale breaking. Should it happen 3, 4, 5, 7, 10 days in a row, you'll feel progressively worse. You'll start to self doubt. You'll start to question yourself about whether you're actually a good trader or not. And believe me, if it happens because of lack of money, you'll be kicking yourself on the backside. The reason is you did not prepare enough financially. You've done your chart reading, you've done your auto suggestion, which is psych yourself up to become a better trader. This is something I've spoken about in my short videos. And you did everything there was possible required by the book, but you did not manage to keep the buffer amount of money that is needed. So money is important. Number 2, now when your morale breaks, you automatically start taking smaller profits and you wait for longer periods of time in your losing trades. That is a strict no-no. It should not be happening at all. When money runs out, you start taking panic-struck decisions. It's not logical. It's completely emotional. And emotions are the biggest deal breakers for a trader. Now, let me tell you a very short story that I heard as a child. There was a sage, a sadhu, who lived in a hut with his shishya or disciples who used to cook for him, look after him, and every night they would see, in India, many parts of the country, sadhus or saints believe that they should not hoard anything at all. They should not own anything. So they even ask for food from people as alms, and whatever they collect by donations given as food by people, they consume that. So this sadhu used to tie up the remaining food into a piece of cloth and hang it by a nail in the wall. In the night, he and his disciples used to see two mice, one a fat big mouse and the other a thin mouse, try and jump up to grab food out of that sack of cloth. Ironically, it was the heavier, bigger mouse who used to jump higher and get the food out of the bag. It should have been the lighter, thinner mouse who should have been agile enough to jump up. Seeing this, the disciples asked the sadhu, the saint, as to why this was happening. The saint told his disciples, "Go and put your hand into the hole in which the rat goes after taking the food. Do that for both the mice. See what happens." Guess what? The bigger, thicker mouse, the fatter mouse, had collected a lot of food. He had a surplus, which is why he had put on weight. Once they took out all the food from his hole, next day onwards, the same rat could not jump high enough to get the food out of that sack of clothing. Why? The sadhu, the disciple the saint taught his disciples that this jumping that this mouse was able to do was because he knew he was backed up by wealth. When you have accumulated surplus, you tend to have a spring in your step. So as a trader also, when you have surplus money, you are confident to tackle the market. You're confident to tackle the mark to market notional losses that will come your way and not get worried. You will not be like that thinner, smaller mouse who will lack the courage, who will lack the energy, who will lack the willpower to make take bigger leaps and go for bigger profits. In this market, in financial markets, it is money that attracts money, and you should be having surplus money. Now, this is something that I have been teaching my child, my son, who I hope one day will run the company after me. Now, for absolutes. How much money should a trader have before he goes out there and starts trading? Remember, I'm talking about trading, not investing. Hypothetically, you can start investing with even 1 rupee because you can buy a single share in DMAT. We are not even getting there. I am a trader. I'll talk like a trader. I would want my son to start with nothing less than 25 lakh rupees as a novice, as a newbie, as a beginner trader. But if somebody was to run their house, like I said, in a tier 1 city like Mumbai, Delhi, Calcutta, Chennai, you will need at least 1 lakh rupees or 100,000 per month to basically make bare bone meeting of expenses possible. That means you need 5,000 rupees per trading session. Now look at it realistically. How much money would you need to collect a yield that will total 100,000 rupees a month? I would say that at that point in time, when you want to seriously run your house expenses with pure trading with no other income at all, it is stretching it too far if you're trying to do it with less than 50 lakh rupees in your kitty. It could be by way of collateral that you pledge with the broker and the cash, because you can't pledge collateral more than 50%, and mark to market payouts have to be made by cash, not by collateral. So even if you're deploying just 10 lakh rupees in trade, you must have 50 lakh rupees total, 40 lying in surplus like that fat mouse. You know that there is more money lying out there. You just don't know when a trade will go against you, and you might need to nurse it for a period longer than you had imagined. Or you could suddenly take a big, huge, unexpected loss because the market opened with a circuit up or circuit down because of some news flow or the other. Now, 25 lakhs for a newbie trader, 50 lakhs to run your house. Is 50 lakhs an absolute figure? No, I don't think so. If you're really planning to live well, have 1 or 2 houses, an outhouse, an extra house out of town, have 1 or 2 cars, etc., maybe even more. But less than that, you basically have a very slim chance. The probabilities of success are stacked against you because everyone once in a while loses money. And if you have a very small amount of money to start with, every loss will make it that much more difficult for you to bounce back again and come back to ground zero and then surplus profits. I hope this video answers your question about how much money you need realistically as a trader. Remember, like I said, this is of course my point of view. You can feel free to differ. I would love to hear from you in the comment segment below. Friends, if you like my video, please share it with your friends and help me reach out to a bigger, wider audience like you who want to be smart, intelligent traders. If you haven't subscribed to my YouTube channel yet, please do so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. And do like, share, and comment on this video. Thanks for your patience in being with me in this video. Till we meet again in my next. This is Vijay Bhambwani signing off for now. Have a very, very profitable day ahead. Take care. Bye-bye.